In terms of market capitalization, traditional automakers have historically fought for the top rank among the major manufacturers. However, consumer demand is shifting. More than half of customers say they would be willing to purchase an electric vehicle the next time they go car shopping. There is reason to believe that electric vehicles will dominate the auto market sooner than you think, and that they will also make their way into the trucking industry. However, this is not really a terrible omen for the industry. EVs will almost certainly be linked to the cloud, allowing them to deliver a plethora of new services that are not currently available in automobiles, for which users will be ready to pay a premium. And it is for this reason that electric vehicle makers have dethroned conventional automakers from the top of the automotive industry. How did Lucid get to be the third biggest car maker in the USA, and where is it now? Keep watching till the very end to find out the answers to these questions. Welcome back to NewVehicleMedia, your go-to channel for EV stock. Quick reminder that subscribing's free, and liking the video helps YouTube suggest similar content. Comments are loved and featured in upcoming videos. Prices for Lucid Group, a fast-growing company, are steadily increasing in tandem with the stock. A day's gain might turn into a day's loss in most unproductive growth firms due to the high degree of short-term volatility that is inherent in the industry. Investors, even those with a longer time horizon, may benefit from keeping an eye on key events, as this allows them to sort through headlines and decide whether specific news items will have an influence on the company's future. The Lucid Group recently accomplished a significant milestone in its history. It first overtook Ford, and then within hours, it overtook General Motors in terms of market capitalization. At one point, Lucid Group was the third largest car maker in the US, trailing only Tesla and Rivian. At the global level, the firm is currently ranked 11th, which is still massive, considering there are legacy automakers that are behind the Californian startup. When the company profit statements were announced, the market responded enthusiastically, which resulted in a spike in the company's stock price. Despite the fact that Lucid fell short of consensus forecasts in terms of sales and earnings per share, the market reacted positively to the company's reaffirmation of previously announced ambitions for 2022 and beyond. After just 13,000 bookings previously, the startup reported an increase of 17,000 reservations for its Air sedan, as well as the Air sedan being named 2022's Best New Vehicle by Motor Trend. The current number of bookings represents a potential sales volume of $1.3 billion. The stock of Lucid Group has also seen an increase in the price estimates of Bank of America and Citigroup. Itay McKelly, a Citi analyst, has lifted the firm's price objective for LCID from $28 to $57, describing the company's third quarter results release as encouraging. Mr. McKelly said that Lucid's excellent electric car technology credentials, as shown by the financial report, are creating both commercial and brand momentum for the company. Bank of America has also lifted its price objective for LCID shares from $30 to $60, indicating that the company is now a better investment. Recall that back in September, Bank of America described the business as a Tesla Ferrari of new EV manufacturers and one of the most genuine startup EV automakers. These reasons allowed Lucid to leapfrog Ford and General Motors in terms of market cap, therefore becoming the third biggest manufacturer in the US in terms of market value. However, the song that was sung in celebration of the startup's success suddenly turned into a sorrowful tune. Three significant events unfolded that hammered the company's valuation: the US SEC subpoena of documents from Lucid on December 3rd, a senior note offering, and CEO Peter Rawlinson selling some of his LCID stock. Following these developments, as well as general market conditions, the valuation of the company fell by about 20%. In the long run, there are compelling reasons to believe that the cumulative impact of these developments, particularly the $1.75 billion senior note issue, will be beneficial to Lucid Vision. Therefore, the marketplace may have had more time to comprehend the news over the past week, which might explain why the valuation is once again on the rise. Despite the fact that Lucid has had a difficult December as a result of these unfortunate occurrences, the firm as a whole is still standing strong. Currently, Lucid is the 5th biggest car maker in the US by market cap and is ranked 11th in the whole world by market cap, which is a remarkable accomplishment within itself. The company's inclusion in the NASDAQ 100 index is only a formality at this point. However, it opens the doors to a larger pool of prospective Lucid investors who may not directly purchase the company's shares, but instead purchase financial products in which the startup will be an associate. In the case of Lucid, the announcement comes at an opportune moment given the company's harrowing cyclone of turmoil. A lot of people are comparing the Californian startup to Tesla for 3 main reasons. First and foremost, Lucid's CEO and CTO Peter Rawlinson served as Tesla's principal automotive engineer from 2009 to 2012, overseeing the development of the company's Model S automobile. Secondly, the company's first EV, the Air sedan, is capable of traveling more than 500 miles on one battery charge. It outdoes Tesla's longest-range car, the Model S long range, by over 100 miles. Last but not least, Lucid has lofty ambitions for the future just like Tesla had when it started. The company has almost achieved its goal of delivering 520 vehicles for this year and is eyeing next year's target of delivering 20,000 vehicles. Because of these advantages, the market currently values Lucid at roughly $65 billion, despite the fact that the company earned less than $1 million in sales in the most recent quarter. Nonetheless, this new electric vehicle firm might someday grow into its value and create significant multi-bagger returns over the next decade, similar to what Tesla accomplished. When compared to other startups such as Rivian, Lucid has the same amount of funding and cutting-edge technology. Similarly, they do not have the sales or profitability to show for it. With its energy-efficient battery pack, combination of executive luxury and a classic sports vehicle, choice to forego building its own charging network, and track record of delivering on its promises as a public business, Lucid is undoubtedly the superior investment right now. A 50-50 split of LCID and another EV startup or a portfolio of EV stocks, on the other hand, might safeguard investors from a single company's unexpected, catastrophic loss if they wanted to diversify their portfolios. In light of the fact that Lucid is a new business, favorable customer evaluations of their products indicate that they should be taken seriously. The most significant difficulty for the organization is growing production to satisfy consumer demand while simultaneously increasing revenue. This means that any news that has an effect on the liquidity of the firm is important. Considering Lucid is now ranked 5th in the US in terms of market cap, do you believe it'll be able to muscle its way back to 3rd? Let us know your thoughts by leaving a comment down below. Walter often believes that the electric vehicle firms with the finest overall technology will be the biggest winners. As the owner of a 2018 Mercedes S560, he believes that Mercedes is the company that is the furthest away from cutting-edge technology. When driving on the highway with adaptive cruise control and autonomous lane shifting, the vehicle goes off the road, and the dealer is refusing to fix the problem. That should wrap things up for today. Keep in mind that subscribing is still free, and liking helps YouTube recognize your preferences. Thanks for taking the time to watch, and I look forward to seeing you in the next one.